Hi, I'm David Nolan, Senior Investment Strategist here at McKinley Carter, and this is your quarterly investment update for July 2021. The equity market continued on its bull run in the second quarter of the year, dominated by strong global growth, transitory inflation, and friendly central banks. With investors embracing the positive outlook, stock and bond markets moved higher. Government bond markets stabilized, and short sellers who bet on falling stock prices were forced to watch from the sidelines. Vaccination rates continued to increase in the U.S. and abroad, while COVID cases continued to drop globally. Tech stocks rallied in June and lifted second quarter performance as investors considered the possibility that the economic recovery had reached its peak as virtually all state economies had fully opened. Growth stocks handily outperformed value stocks, and corporate bond prices rose modestly, all while the Federal Reserve maintained their position to keep interest rates low into 2022. After reaching multi-year highs, prices of commodities such as lumber, oil, corn, and copper began to recede. Global GDP growth is still robust and should continue into 2022 as the effects of the pandemic continue to wane. One big topic of conversation lately has been inflation, and while we expect inflation to be more of a factor in the coming years than it has been over the past decade, the post-COVID consumer tilt towards spending money on experiences versus goods should help ease inflationary pressures. Federal Reserve Chairman Jerome Powell has continually stated that despite higher inflation data, the central bank will not be raising rates anytime in the immediate future, as they feel inflationary pressures will likely be transitory. Despite strong 2021 performance, McKinley Carter's Investment Services Council believes equity markets will likely generate better returns than the bond markets for the remainder of the year. Price-to-earnings ratios in the stock market, while higher than their historic averages, are still less expensive than those found in the bond market. In light of this, McKinley Carter's client portfolios are maintaining an overweight to equities. As always, our investment strategy team is monitoring opportunities to improve our client portfolios. If you have questions about our process or outlook, please contact your McKinley Carter financial strategist. If you are not yet a client of ours, we'd welcome the opportunity to share more about our process and help you take the next step towards mastering your wealth.